ever wonder why you have a 700 plus credit score and you're still getting denied for funding? That's very discouraging, right? Guess what? In this video, there is something that many of you are unaware of that banks and underwriters are looking into when it comes into reviewing your application for personal or business funding. And then guess what? In this video, I'm going to cover actually what that secret is, how to avoid it, and more importantly, how to go ahead and overcome it to be able to go ahead and get yourself approved for funding. So let's go ahead and tap on in.
This conversation about building up your blueprint. It's time to take it, cause time is wasted. Go grind and chase it, don't lose it. This generation need integration with information to move with. An inclination that is abiding in entertaining improvement. Yep.
Hey, what's going on, Blueprint Nation? Welcome to another dope video of the Respect My Blueprint podcast, where we give you all of the game as well as the blueprint that you need to know on how to build business credit, personal finance, entrepreneurship, and business as well, too. Listen, if this is your first time checking out the channel, do me a huge favor, take a couple quick seconds and hit the subscribe button, as many of our viewers are non-subscribers, and we're trying to go ahead and change that around, and we want to be able to go ahead and increase the members of our Blueprint community, okay? Now, in this video, I want to talk about something that a lot of people are being affected by this, and it's becoming more and more common, and that is getting denied for personal and business funding. Okay. And what I'm going to talk about is how your banking activity actually plays a huge part in 2025 when it comes to whether you're able to go ahead and get approved for funding. And guess what? Nowadays in 2025, the game of credit as well as banking more and more intertwined, and they're more and more being considered together when it comes to whether you're going to get approved for funding. So most people don't think how your bank account doesn't play any effect when it comes to your credit card or banking application. Well, guess what? That couldn't be farthest from the truth. So I want to go ahead and touch upon this topic today, as they're pretty much in the same group chat. And guess what? Bank underwriters as well as lenders are taking more into account than more than just your credit score. They're using other metrics and data to be able to determine whether they want to approve you for funding, whether it's a personal or business loan. So today, I'm going to break down how your personal and business bank accounts could be the secret reason why you're getting denied for funding, even though you have a good credit score. Now, the first thing that a lot of people are unaware of that plays a very huge factor when it comes to whether you get approved for funding is things such as bounce payments, overdrafts, and NSFs. These couldn't scream a bigger red flag when it comes to applying for funding. Now, this especially comes to the case when you're building relationships with big banks such as Wells Fargo, Chase, Bank of America. When you're applying for business credit or personal credit cards, these lenders are definitely going to look into your banking activity or in your banking relationship with them. So let's talk about some of these mishaps, or let's talk about some of these things right now. Things such as bounced ACH fees, overdraft fees, NSF fees. These are all things that definitely will prohibit or can cause a denial when you attempt to apply for funding with any of these institutions. Okay. Now, the crazy thing is they may not show up on your credit report directly, but underwriters do see everything when you apply for funding, especially when you're applying with these institutions. In fact, in 2025, over 60% of small business denials was due to because of negative cash flows that was occurring on recent applicants' bank accounts, even though the credit scores was in the 700. So in other words, if your account balance is at or near zero or at a low minimum balance and you're racking up overdraft fees, I'm letting you know that more than likely is going to put you at a denial phase when it comes to applying for funding, although you may have a 700 plus credit score. So you definitely want to make sure that you're limiting any negative or bad behavior with your bank account or with your banking institution before you start applying for funding, especially within the last 3 to 6 months, as that is typically the period that banks look into when they're looking to go ahead and decide whether they want to approve you for credit cards or any type of funding. Some of the things that underwriters also do want to look beyond your FICO score is things such as your average daily balance. Are you maintaining a respectable average daily balance? Also, consistent incoming deposits. This is something that I largely educate in my community. It doesn't have to be nothing exorbitant or nothing that's mind blowing, right? But you want to make sure that you're making consistent deposits, whether it's weekly or bi-weekly, whether it's $100, $200. Making consistent deposits is definitely a great indication to banks that you're looking to build a solid relationship with them. Also, you want to make sure that you're basically limiting any NSF or any overdrafts within accounts. Having NSFs and overdrafts shows that you are being irresponsible with your money management as well as the account. And of course, if you're trying to apply for 10, 15, 20 funding or business or personal credit, how can they trust you with extending you more credit if you're unable to even manage a simple checking or savings account? It's pretty common sense, guys. So that right there is something that you definitely want to pay attention to when you're applying for funding. Also, you want to have business transactions that matches your industry as well too. Having electronic payments such as Zelle, Cash App, or anything like that from your industry, 9 times out of 10 is going to be required of what lenders are looking for. They want to make sure that your business is consistent with the type of transactions incoming into the account as well. And they can and will deny your application based on cash flow instability, mismatch of business type. This is something extremely important when you're applying for funding and when you're setting up your account. You want to make sure that whether you're accepting payments from a merchant provider or from a third-party electronic payment service, that all of your transactions are consistent and congruent. Okay, so let me give you an example. If you're running a digital marketing agency, but your business shows that you're only making $100 a month in merchant income, that's a clear red flag right there. Especially nowadays, lenders are able to go ahead and connect and view your business banking transactions in real time with third-party platforms like Plaid. Is very important that you're consistent and uniform across the board so you can avoid any mishaps, okay? So now that we've discussed some of the things that may be hurting you when it comes to applying for funding that beyond your FICO scores, just because you have a 700 FICO score doesn't mean that you're automatically going to get approved, right? So here are some of the things that you can do in order to be able to put yourself in position and help yourself to strengthen your business or personal funding application. Okay. Number one, keep a consistent deposit flow. All right. You want to make sure that you're making at least a couple $100 each and every week or every other week. This right here is a clear indication to lenders that you also have consistent cash flow coming into the account as well. All right. Also, maintain a respectable average daily balance. Now, if 9 times out of 10, I encourage clients to go ahead, if you're opening up a business checking account, that you go ahead and open up either a free or a zero minimum daily balance. So therefore, just starting out, you're not having to go ahead and maintain a high daily balance on the account, but keeping a respectable balance such as $200-300 is a great way to start off with. And as your business is scaling, as your business is growing, you want to be able to start increasing that number there to show the lenders as well as the banking institution that, hey, you're able to go ahead and handle a large amount of transactions. Also, you're looking to build a further relationship with them. Okay. Another thing that I definitely want to share is making sure that you're opening up a separate business checking account. Right now, this even goes for my sole proprietors as well as my single member LLCs. You don't want to conflate or commingle your personal and business expenses, as number one, that's going to be an accounting nightmare for you, especially when it comes for taxes, for bookkeeping and everything like that. So make sure that you have a separate business checking account for your business and you're not using your personal bank account, also lenders are going to be looking for that when they want to be able to see business bank statements, or and they also want to make sure that you are running your business in a legitimate way as well too. All right. And of course, like I mentioned, avoid things and red flags such as overdraft fees, NSFs as well too. Lenders hate instability, and there's nothing that screams more instability than having non-sufficient funds and overdrafts all littered throughout your account, as that's going to be a clear indication to go ahead and put you in the denial status versus the approval status. All right. So pretty much that's the reality of everything, guys. Here, lenders just don't check your credit. They actually more look at behavior. Your credit profile also comes into play as well too. So it's very important that your banking behavior matches your credit behavior as well too when you're looking to apply for funding. Your bank statements also is your financial resume. Just like how your credit report is your credit resume, this goes in a sense for your bank statements on your financial resume. That's why, again, it's very important that you maintain consistent incoming deposits as well as a good daily balance on your business bank account. As you combine all of these things here, is not only going to strengthen your chances for approval, but also strengthen your chances for a high limit approval as well too. Okay. So clean up your account, make sure you run it like a CEO and everything like that. And the next time you apply for funding, you're going to see you're going to put yourself in a better position to be able to get approved for funding. All right. So I hope you was able to go ahead and get a lot of great gems from this video that I shared with you guys. Listen, if you need more help, or if you want to be able to learn more on how to be able to repair, build, and leverage your credit, I've launched a free community, which is the Blueprint Movement community, where we're helping like-minded individuals to not only build up a 700 credit score, build up a fundable profile, but also get up to $50,000 or more in funding. This is an absolutely free community. The link to join the community is down below, where you'll be able to go ahead and join and learn all of the secrets and strategies where we've been helping countless of individuals to be able to level up in their business as well as get funding for themselves. Now, also, do me a huge favor. Like I mentioned before, go ahead and hit the subscribe button and hit the like button so we can go ahead and produce more content like this. We try to release videos twice per week to be able to go ahead and educate everybody on the world of personal finance and business. And also leave a comment if there's anything that you like about the video, or if there's anything that you would like for me to further share on. Would definitely love your feedback. But other than that, thanks for tapping in. Thanks for tuning in. And as always, catch you on the flip side. Take care. Bye-bye.
Blueprint, yeah. Blueprint. This conversation about building up your blueprint. It's time to take it, cause time is wasted. Go grind and chase it, don't lose it. This generation need integration with information to move with. An inclination that is abiding in entertaining improvement. Yep, West Paul with Blueprint. This guests are exclusive. Get on and tune in, and then learn some new tips about credit, finance, investment. A nice chance to get rich and buy land. Flip it, quick 9 bands. Learn all the skills from Wes, he did it. Learn how to build successful business. Run up a mill and get the digits. Run up a mill. Look, safe place where guests are speaking. Based off financial freedom. All facts, no cap, believe it. Podcast, you have to see it.